Well, this is absolutely insane.
If you didn't have enough time to check the overall stock market today, let me ruin it for you. A little bit of a spoiler alert. TLDR is a new all-time high, and it doesn't look like the bears are anywhere to be found. In this video, I'll be breaking down the major news of today, basically what spurred us to hit new record highs. But more importantly, I want to dive into what you should be paying attention to for the remainder of this week. I'll give you the bull case, the bear case, and you can apply whatever is best to you and your personal opinion of the market. But first, I should probably kick this off with a double apology. I know that I've been missing a lot of our regularly scheduled content. I was in Switzerland for the Plan B Forum event with Tether and Rumble. It was a phenomenal time. Great event, beautiful country, but sometime between then and now where I missed all that content, I also caught some form of cold, and that did not make the travel back any much more fun. So I'm sorry that I look and sound worse than I normally do, but hopefully this will be done in a couple of days. But anyway, if you're willing to muscle through it with me looking and sounding like this, I'm willing to muscle through it and make these videos for you because, of course, who doesn't like chit-chatting about the overall market? What a phenomenal way to kick off the last trading Monday of the month of October. S&P 500 rallies 1% to notch first close ever above 6,800 on potential China trade truce. And you can see dingity ding ding ding, we hit a new all-time high in the S&P 500, gaining 1.2%. The Nasdaq, similar situation, double gap up, gained 1.8%, looking very, very strong, not only in the daily chart, but also intraday. This thing was just ripping, kind of a slow grind, and then basically into close, and literally as I'm filming this, the SPY ripping, the Nasdaq ripping, Qualcomm having a really good day, up 11%. I'll get into that, and then so did Tesla, up 4.3%. But it wasn't just these guys. Literally the entire S&P 500, yeah, a little bit of weakness in consumer defensive, maybe down here in some aspect of healthcare, but overall the heat map of the S&P 500 was clearly a very bullish one. But it wasn't just the price action. The options market fully agreed. The delta ripped all day in both the S&P 500 and the Mag 7. And for those of you paying attention in the Goonie Trading Discord or maybe the live show or these update videos, I did finally lock in my profits. I've had SPY and Q calls for a little bit here. I got in on the 20th. Right here, we had the SPY 677 long calls. It cost me about $16,000, made 30, so that's almost a $15,000, $16,000 profit. And same thing with the Qs, cost me about 15.3, got out for 29.7. So really, I locked in about $30,000 in profits. Quick side note, if you're not on public yet, that's this brokerage. Definitely check it out because that's where you get paid a rebate for every single options contract you trade. But anyway, that's just some random commentary. They're actually not even the partner of this video, but I absolutely love it. I was recently looking at how many rebates I've earned year to date, and it is thousands of dollars. Obviously, I hope you got yours, but what's more important is why in the world did this happen? Well, as that first article alluded to, it is the uncertainty surrounding the US-China trade talks is being removed and the market's simmering down, which means we're just really ripping to new all-time highs. According to China, and this is very important because a lot of the times the US is saying something and China doesn't really back it up. So these comments are from China, which is why the market really liked it, reached consensus with the US, talked about tariff and export controls, and will enhance communication with the US, which is a lot of political talk for saying, hey, we're figuring it out, especially going into the talks later this week between President Trump and President Xi in South Korea. So the foundation is there, things are looking good, and obviously the market is really stoked. Trump says US and China close to trade deal ahead of the Xi talks and the TikTok decision. So once again, a little bit later on, they will be meeting in Malaysia. Pay attention to that because obviously it's going to have a huge impact on the market. But there is one sector that at first was doing well and now isn't because of all of this. So rare earths getting completely destroyed. Rare earth stocks extend losses as US expects China to delay export controls. So they all ripped when there was a big issue, a big kerfuffle, if you will. But now that things are calming down, of course, so is the price. And actually, because of that, we're also removing uncertainty generically from the system, which now means from the all-time high, gold is officially down 8.75% after this monstrous rip back up. Of course, it hasn't really broken a recent low. It hasn't broken the 50 AMA, so I'm not saying it's done, but I'm just letting you know that's a sizable drop. Oddly enough, digital gold, aka Bitcoin, is having a pretty solid rip, recently bouncing off of 104,000, currently up about 11% from that moment. And I should let you know, even though it wasn't the biggest news, we did also get other trade talk updates. Mexico's Scheinbaum says the US extending trade deadline for several weeks. So another thing, kind of calming people down, removing uncertainty from the system. Now that we're all on the same page that, you know, it's trade deal, and trade deal of why we're hitting new all-time highs, the question is, where are we going? because I didn't make the normal Sunday night update video, I do want to let you know that October, the final week, it's a little bit choppy. There's this downswing and then a push to the upside. And I should also let you know over the past 5 years, this is actually a red week, and the past 3 years is slightly green. But the exciting thing is next week, the first week of November, is actually seasonally the most bullish week of the entire calendar year. Yes, you are hearing me right. Next week, to kick off the month of November, it is seasonally the strongest, the most bullish week of the entire year based on the last 5 years worth of data and based on the last 3 years worth of data. Now, with respect to this week, to wrap up the trading month of October, we have a lot of data drops coming out. Tomorrow, Tuesday the 28th, we get the CB consumer confidence. Wednesday, the FOMC interest rate decision, where right now the odds are sky high of a 25 bips rate cut. On Thursday, we get the GDP number, and then on Friday, we get the inflation report, the PCE report. So basically, if you're watching this either Monday night or Tuesday morning, from here on out, every single day has a lot of information dropping. Oh, and I almost forgot to mention that we are in the middle of earnings season. In fact, this week, based on market cap, is the biggest percentage of the S&P 500 reporting. You can see tomorrow, Tuesday, SoFi, United Health Group, PayPal, UPS. We're also going to get Verizon, Boeing, Caterpillar, CVS, Meta, Microsoft, Google, Chipotle. Those are all on Wednesday. Thursday, we're going to have Amazon, Apple, Coinbase, Reddit, Strategy, Riot, Cloudflare, Roku, and then on Friday to wrap up the week, a lot of energy plays, ExxonMobil, Chevron, just to name a few. Feel free to screenshot this. Feel free to go to @eWhispers on Twitter. This is a great tool, but like I said, in terms of market cap, the largest percentage of the S&P 500 is reporting this week, on top of the FOMC decision, consumer confidence, GDP report, and the PCE inflation report. So as you can tell, every single day, there's going to be a lot going on. And just because we're here, we should probably chit chat about the fact that Qualcomm had a phenomenal day. Qualcomm soars after taking aim at NVIDIA with new AI chips. Qualcomm announces AI chips to compete with AMD and NVIDIA's. Stock soars 11%. It certainly did. It didn't technically make a new all-time high, but it also wasn't that far away from it. Intraday, you could see right when this news was announced, actually you can see it better on the 5-minute, pretty much right around 10 a.m. and this thing skyrocketed from 170 all the way up to 206. In my personal opinion, this isn't worthwhile to chase right now. I want to see how things settle down because that's a big expanse of volatility. So maybe if it can make a nice higher low, a strong foundation, and we bounce off of that, maybe I'll play it. But for right now, when there's a big binary event like this, the money is obviously made beforehand, not after the market already reacted. And last but not least, we should talk about the overall market reacting. Like I said, I want to give you the bull and the bear case. So if you've been paying attention to the market, you know today we hit a beautiful new all-time high. The bull case here is all those upcoming earnings announcements, the trade talks, and really all the data drops just send us higher and higher and higher. Right now, there's a lot of people playing 6,900 and flat, which is what percentage gain would that be? That's another 0.4% from here. So, okay, things to consider. And I'm not saying that's the exact target because, of course, the market is dynamic and we could have higher targets, lower targets. I'm just saying when the day started today, that was the major reach target, if you will. So with all that in mind, if all those end up being bullish, once again, earnings, data drops, and all the trade talks, yeah, this thing can keep cruising, especially if you look at the positive gamma beneath in the overall market and the negative gamma above. That is ripe for these nice grinds to the upside. However, from a technical perspective, not only do we have one downside gap fill from the high on Friday, we also have another downside gap fill from the high on Thursday. So for me, yes, I am bullish in the overall market because price structure, options flow, price momentum, there's a whole host of reasons to be very bullish, even the upcoming seasonality. However, I don't necessarily want to chase it at this record high, knowing that there's going to be a lot of short-term bears out there targeting these downside gap fills. So please be aware of both. From a technical perspective, this is getting a little frothy and the bears will be targeting the technical gap fills. But then from the world of options and price momentum and really just an event-based outlook, all these things are looking pretty bullish. So there's your bull case, obviously the latter, the bear case, the former. And for me, since I locked in about 30 grand today, I'm just going to wait for a little bit of a pullback and basically just reload for the next leg higher. Obviously, these are my own thoughts and opinions, so I beg of you to not just randomly copy me. Obviously, you have to feel comfortable in your own trade, but if you're doing so, I highly recommend that you check out what's going on with Public because it's the only brokerage I know of that pays you a rebate every single time you trade an options contract. That's what I have for you today. In all reality, I'm about to go crush a nap after taking a fistful of Dayquil because I feel horrible. So thank you for putting up with me sounding and looking like this, and hopefully tomorrow's a little bit better. I appreciate the good vibes. I'll catch you in the next one.
Peace.